How's it going on, y'all? Welcome back to another brand new video on this channel. And in today's trade recap, I'm going to go over exact strategy that I utilized to make 3 back-to-back winners trading in Q. Without further ado, let's jump straight into the video. So this is the strategy here. I'm going to go in replay mode here real quick so we can go straight to the charts of where exactly this day was. Again, this was on Wednesday, January 14th. I was able to catch 2 risk reward, 4 risk reward, and another 2 risk reward, netting me a total of 8 risk reward on this day. This day, again, this is considered really good market conditions. This is when you really want to be making most of your money. So never miss out on days like these. I'm going to go over exactly how I entered all these trades as well as my targets. So first off, usually when I start off the day, let's go on I usually don't go on daily time frame. I first look at my daily bias indicator. I see it is bearish because this is the easiest way to quickly identify my daily bias and direction for a day. My daily bias indicator updates every single day. So it tells me it's bearish today, therefore I want to be leaning bearish. Now, I do also want to do my own bias, right? I want to go on the lower time frame myself and see, okay, where is price moving towards? Well, on the 4 hour, you can see it's very messy here. There's so many trades everywhere. So let's just go into 30-minute here. Clearly, we are very bearish, right? If you just look at the current trend here, we're going down. So follow this current trend on the right because the left trend here has already failed, if that makes sense, right? We're already in the downtrend here. So it doesn't make sense to us to trade to the upside here. So if we go to the 15-minute and 5-minute, you see we're clearly bearish. And so I'm just following this current trend. So because this current trend matches my daily bias, it improves the quality of my direction on this day, drawing liquidity. Now, what I did notice off open is that we had the data wick here. Okay, we also had data wick here. This was 8:30, I think PPI news, I believe, if I'm not mistaken. It was red folder news, okay? This is not the greatest data wick. Usually for data wicks, you want to see something that's outstanding, that's very obvious, and obviously looks like a data wick. In this case, it's pretty obvious that this is not really a data wick in terms of just visually looking at it. Because look, this candle here looks like a data wick too. So how do I know which candle is a data wick? If I turn all this off, you wouldn't know where the data wick truly is. The candle size is not super significant compared to relatively every other candle around it. So this is a low, not a great data wick is what I'm trying to say. We took out the low data wick already, okay, but this was before my session. My session started around open. So we had open here at 9:30 for New York Stock Exchange. We had a break structure, and I quickly just took a impulse model because I saw we had an impulse delivery. I know everyone's trying to sell this market, but I'm trying to buy this back up because you see we have a data wick as a potential draw. I just took an impulse model here, got a little bit late of a fill. And my target, instead of targeting the data wick, knowing I am counter trend here, I just want to take my profits at these highs right here. As you can see, I labeled right here, because this here is basically your inducement for the PY right above, which is the origin. So I don't want to get too greedy because we won't always take out both sides of the data wick. For my data, 80% of times we do, but not always, especially when we have a A+ setup that is before the data wick, right? We have an A+ setup here. Why? Because inducement, tap into origin. This inducement is basically like your liquidity sweep in a sense. It could even be considered liquidity because of how big this range is, right? So once we TP'd here for 2RR, so if you just go back in replay mode, I'll show you guys real quick what I was looking at here. Again, took out liquidity below here, and I just want to take a quick counter trend trade to the upside. And so entered here, impulse stop under or buy stop, targeted the high, and then boom, we got it. Now, once I TP'd here at this high here, I set a limit order, okay, at this data wick. Sorry, I set this limit order at this data wick. And so once I set the limit order at this PY here, I covered the data wick. Why? I'm covering the data wick because we might actually sweep it. I don't know for sure. Again, 80% of the times we do sweep both sides. So I did cover this a good amount in case we do give a little tap or sweep. But I do know in the back of my mind, this is still an origin play off inducement. It's still a very high probability, and I'm trading with the current trend, right? So that's what I kept in the back of my mind. And so again, limit order filled, and then essentially price really just ran pretty fast. These trades were amazing, right? 2-minute trade, 10-minute trade to hit 6 risk reward. Nothing else out there like it. Now, next up, I'm just waiting patiently. Why? Because now we have no really impulse model anymore. Okay, no, not as good as an impulse delivery, and we're just waiting here. I'm trying to look for a basically either pro trend or counter trend trade setup. So wait here. As you can see, I missed this counter trend setup. Okay, there's an IFG here. Ideally you'd be taking this one because this is the extreme. You want to be using the extreme IFG in the leg. Where is the leg in this case? The leg is actually the pullback is here, bullish candle, bearish candle. If there's a bullish candle here, you would use this, but because this is all bearish candles, you have to use this IFG here, which in this case is pretty high up in my opinion for my personal taste. I missed this short here, as I labeled it unfortunately. This is almost the exact same thing if you realize this is basically the same thing as this. Both A+ setups. I missed the setup unfortunately, so I cannot catch it, but I know there's members that caught it. So that's great for you guys. Basically, you can use this IFG. Again, widen your stop loss. Don't put it at the exact high. You will get wicked out at times, and you'll be fine. You can go for a 3.5 risk reward. There's also members I saw in the private group that took the OB entry model, which you could have got a 5 risk reward. Again, targeting either the low or 3 risk reward targeting demand. I would have just targeted the low just because, again, like I said, you're trading with the current trend, so lows are weak. And then boom, easy 5 risk reward. I missed out on that, and then I was waiting for it to see if I can get like a counter trend setup real quick. So I did eventually get this counter trend setup. I think there's maybe even something on the higher time frame on the left. I'll have to see if I can check this. Let's see. I think ES hit something on the left here for high time frame demand is what I was remembering. So that's what happened there. And then I took this counter trend setup here. We have a break, counter trend setup here. You can either do two things with the counter trend setup. You can either wait for price to give you a structural delivery, as in giving you some confirmation to the upside in terms of your trade bias or idea, as in wait for structure to shift, right? High, low, high, low, high, low, lower high, higher high. That type of idea, or you just take the first entry model. In this case, I didn't see an entry model because the OB entry model here didn't get filled, so you would have missed out on that, and there's nothing else here to take unless you took a stop runner here, which it would be this low. You could either take this low, or if you waited for this low, it wouldn't have gotten filled. So you could have taken a stop hunter here for better risk reward, enter here. Using my new video in the course I talk about with the stop hunter, you could have gotten a nicer fill here at the slow here, and you could have got like a 5, what is this? 7 risk reward going for the PY. So, but anyway, I did not get that 7 risk reward, unfortunately. I just took the IFG here just for extra confirmation because we are in a downtrend. So this is my IFG here. Again, waiting for body closure, candle body closure above, and the stop loss was kind of covering this low here just to be safe here. And this was my 2RR trade. And some people may be wondering, where did I even find this supply, right? Keep in mind, whenever you're counter trending, you don't want to go for crazy targets. You're going to pay for that, right? You don't want to get greedy. So where did I find this target? You just alternate in cycle timeframes. I know for a fact, if the 1 hour that doesn't have a PY here, the 30 minutes not going to have one, most likely. Let's go to the 15 minute. 15 minute has a PY above here. So let me draw a line here and here, but here is way too low. If you look at the red line below that I drew out, this is way too low. This is a 1-to-1. Again, no hating on 1-to-1s, but if you do your 50% tool, this is not in discount, right? So let's do 50% tool real quick. Discount is, or sorry, premium is what I meant. Premium is up here. You need to find a PY within premium, not in discount down here. So we found finally something, and this was off the 5-minute chart. So let me go on the 5-minute. Let me delete this red line. That's a 15-minute supply. We had a 5-minute PY right here. So I marked out this 5-minute PY, and it got mitigated. Now, a lot of people probably would have actually missed the shorts here. I missed the shorts here personally. But a lot of people would have missed their TP is what I'm trying to say, because you probably would have tried going for this obvious 1-minute supply zone, which again, yes, there's 1-minute supply there, but you need to alternate your time frames because like I tell you guys all the time, 5-minute and 1-minute are the two strongest time frames that I'm usually staying on for the most part, especially looking for PYs within my ranges, because remember, there's so many trading opportunities on the lower time frame. I don't need to wait for a high time frame PY such as 30-minute, 1 hour, 4 hour to look for trades. And it's the part where a lot of people get stuck on or mistake my system with. So keep that in the back of your mind. I just TP'd, like I said, at the 5-minute here. If you're on the lower time frame and you didn't want to cycle through time frames, we do have a POC here. You could have also targeted this low here. I'm sure this you can also use as a POC, but to be honest, for the most part, this is the most obvious POC. So you would have just targeted this if you were just looking on the 1-minute time frame, which again, your risk reward isn't much different than mine, right? Aside from this, I missed a short again, once again, and that's basically ending my session here for the most part. Looked at session later with you guys on live stream, and it was just chopped, so there's not really any trading opportunity unless you took it on ES, which there was an upside, very nice upside long. On NQ, it really was just really choppy, as you can see. Not great conditions. This is just consolidation. You want to avoid trading consolidation and wait for a new range to form. As in, don't just wait for a breakout. There's a lot of fake outs when it comes to consolidation. You want to wait for a breakout and then a continuation of that breakout. So you see how there's a breakout to the downside here? You don't want to just immediately assume downside here. You want to wait, price out to see what's going to happen a few minutes after. And you can clearly see a few minutes after, price broke to the upside. But this is still not enough confirmation for me. You need to wait for a new structure to form. We have new consolidation here, and then boom. At this point, once we have this right here, this new break above, right? This massive break above, going for this new range here instead of ignoring all this consolidation, this is when you can ask yourself, okay, I can finally look for a setup or a trade because now we have something new I can trade off of, right? We finally broke out. Otherwise, if you're gonna assume this tiny wick is a breakout or this wick is a breakout or these wicks is a breakout, you're gonna get lost in the sauce and you're gonna get cooked in the market, okay? You don't want to be forcing trades in consolidation. You want to be forcing trades or taking trades in expansion like this on the left. So hopefully you guys do enjoy today's little video. If you guys want to learn more from me, check the link down below to join the 100 or so course or the mentorship. And I'll catch you guys in the next video. Peace.